Hey there, how's it going, everyone? It's a Stock Options, the Straddler podcast. It's Friday, it's June 2nd, 2023. It's the end of a short week in the stock market. I'm going to start having the date and the time show up here because it matters as we update this thing. So, let's get into it. The Straddler is doing good things, and I'm learning how to read the list of companies better so that I can explain it to you guys now. So there's going to be a lot on the screen, but this is a podcast, so you can just listen if you can't look at the screen, you're driving, doing something else. If you want to try to learn how to purchase stock options and play them in such a way so that any large moving activity goes in your favor, whether it be up or down, just playing the volatility, you can do it by straddling and buying a call and put on the same stock at the same strike price. And today it worked out. Yesterday it didn't work out. Yesterday I was down about 400 bucks, almost 500 actually. I was down almost 500. I invested about a little over $4,000. It's like 4,400 that I put in there a few months ago. And the last 3+ weeks, I've been doing the Straddler strategy, and that's been up every single week. And this week is no different, even though two of the days this week, one day I lost 500 on Tuesday, and I lost about 500 yesterday on Thursday. But I made 600 on Wednesday. So down 5, up 6, down 5 again, let's call it. So you're down like, $400 or something overall. Well, today I opened up, and like right after the open, I was up by like $1,500 or something. And I quickly figured out what was happening, and I sold some stuff and I secured it in. So I'm up well over 1,000 today in the middle of the day, and I'm up for the week on stuff. And let me explain why. Because basically what happens is, as abrupt things happen in the market, when you own a call and a put and you're holding them, if it moves, drastically in any direction, then all of a sudden the intrinsic value of one of those options goes up a tremendous amount because they moved so many dollars. So the one that happened today is going to be, this is, as of this export is as of like 10, not even an hour into the market, like 45 minutes into the market, maybe 10 or 10:15 a.m. So there's still a ton of market activity to go today, but I want to show you just what happened in the first hour. So apparently MongoDB is up a bunch, but the one I want to talk about, the downs, the ones that went down, even though some went up. Let's talk about what went down. Boom! All the way at the bottom is a company that I bought yesterday that the algorithm has brought up on multiple occasions. When we look by ABS rank, I always like to look at ABS rank. Where's T-Mobile on here? They pop up here a lot. I bought them yesterday because they're so good. Where are they? Where's T-Mobile? Oh, we need to add a formula. Sorry, they're not on there because the formula is not there. Check this out. Of course, it was like, why are they not on here? Check this out. This is why they're not on here. Yeah, they're number 2 right now. And you can see why. Now their options are not going to be 381 bucks anymore. As a matter of fact, we need to answer that question. So I'm looking on my other source here to figure out what their options are. But they dropped dramatically. And even though that's an option that I had that didn't even expire this today on the 2nd, expired on the 9th, I had a tremendous amount of time. I already sold my put in T-Mobile. And yeah, their options are now going for that week period of the June 9th period. They're going for 275 plus 225. They're going for $500 now, everybody. They are no longer going for 381 because they already moved so much. So this ranking is going to change slightly. But for those of you who want to see things in ABS rank, don't look at Hasbro because they're broken. Like they didn't, we're actually going to get rid of them because we don't care. They're a $60 share company. And we'll also get rid of them here. We don't, Hasbro doesn't move enough for us to want to invest in them, I believe. So we're going to get rid of them from this list. But we're going back, and I want to show you kind of why the algorithm does this and how this is great. So the algorithm has been pointing out by ABS rank and by cost ratio and by today's boom number for many different times that T-Mobile tends to move dramatically for a company. And their options are not as expensive as they should be, is what we learned about T-Mobile, which is why I bought them yesterday when I didn't own them, because I'm like, why don't I own T-Mobile? They're profitable every week, sometimes in both directions. And they're over $100 share company, so they have a reasonable share price to do this with. You want companies with higher share prices. I am thinking about removing companies that are even below like $70 a share. Like they're just not worth it. You need movement by dollars. Like these type of movement don't result in huge dollar gains. Like, every dollar it moves is $100 in the options value intrinsically if you're already in the money. So it's kind of like, I don't know. Like I had Citigroup this week. I actually lost money on Citigroup this week. And it's because they moved a little bit and I sold it at a couple losses, but they just never moved enough to get out of it. I spent over 100. Yeah, I spent like 100 and I spent like 160 or 50 something dollars on Citigroup, 80. Yeah, or something like that. And I only got probably 100 back, or not even. So I screwed up that. And it's because they don't move enough. Now, so there's an argument to be made for removing these, but before I remove them from the list and don't want to talk about them as much because they're not as big nominal money makers, I just want to kind of gloss over them, but look at the ones that are higher share price companies, because that's where you're actually going to result in some nominal profits that are reasonable. Like T-Mobile today, down $12. So that's $1,200 in intrinsic option value right there, which is exactly what happened. I sold my T-Mobile option for like $900 this morning, right after the open, that I bought them for a total of $360 or something, $375. I got a great deal on them. So I already tripled my money almost, and I still have a call. And the reason why I sold it right away and didn't want to wait this out is I was like, okay, all the telecoms all of a sudden went down because Amazon announced they're going to do like phone service or something. So I almost want to look at telecom sector for a second to see what's going on. So Verizon way down, which by the way, Verizon was the #1 pick from last week. I still owned the puts on this because they kept going up, and I sold them today for a profit. Unbelievable. Unbelievable how awesome the algorithm was. Verizon is not on the rankings anymore. They're not on here. Not because they didn't do well, because I removed them because they had too low of a share price. So I decided that they don't move enough, yet I still profited a pretty good percentage on Verizon. I think I made like 30% on. I'll have to double check. I definitely made a profit because of today. I do not know how much it is. It wasn't, hundreds and hundreds of dollars, but it was probably like close to 50 or $100. And so it's kind of like, I don't want to recommend them because they're low share prices. At the same time, percentage wise, they are resulting in profit sometimes. And it certainly did with Verizon going up yesterday and then down today. Crazy stuff there. I did not profit on Comcast. Actually, I don't think I did not profit on Comcast. I did not. They didn't move enough. Once again, too low of a share price company. I did profit on Cisco because I bought all of these at some point. And of course, it just made a good amount of money on T-Mobile right there. Now, the other ones don't look to be moving as much. AT&T moved down a lot, but they're too low of a share price, so they're not even listed in our list. All right. So point is I want to say that as the market moves dramatically, you just win. Straddling stocks is what happens. And today was a great example where I didn't know this news was going to come out of nowhere, but I picked a company that the algorithm likes a lot. And today they happen to have extra special day by moving more than normal because that's what they do. So what have we learned now about what to pick? We do want to pick things that have good ABS ranks and also high share prices, right? So is Nike a good one? We have to double check price. And I kind of want to update these things as they move, but they're not a huge share price at 106. Like, for example, I bought Home Depot, and Home Depot is, still moving. Sorry. Home Depot is getting close to profitable range after only owning it for 2 days or something. Once again, they're moving. They're up like $4. It was I overspent, and I spent a little more than this on their options. It was closer to $1,000. I spent like $970, I think, on their options, but way overspent because I screwed up when I bought them. But they're getting close to a strike price here. They're already at 292, and I have them at a 285 strike, which means they only need to move another few bucks, and I'm going to be able to sell one of those at a profit right now, 7 days before expiration, because I have this expiration period of the 9th. And I chose this one because, one, I wanted to work with some higher share price companies that the algorithm says tend to move well. Okay. So I keep looking at this list that we keep sorting. And I sort this, our ABS rank numbers, by the way, went up because I started grabbing the new option period of the 9th earlier this week. And these are longer options than, these were 10-day options or something when I grabbed these prices. I need to refresh prices every day to make this thing accurate for everyone so that these ABS ranks are accurate for everyone, because I'm not updating the price in real time. I don't have the coding yet to grab bid-ask prices from a source and import them on a real-time basis. It's just not, I don't know how to program it yet, because I don't even know if that information is technically available in real time to query. I do not know. Or at least I haven't been able to find a source where I can get it accurately. So you just got to do it manually. And that means we update this and we refresh. And, like I should go and change T-Mobile right now because of this drastic change. It's really important to look at where they are on the list. Sorry, no, T-Mobile. Is it one word or is there a hyphen? No, just TMUS. I want to update that because they have a new strike price, they have a new situation, and basically I saw that these things were like this now. Yeah, it was like 215, 260 or something like that. Something like this. And the strike price was a lot lower at like 128 or something like that. And basically that's going to change everything in how they look. And so when we refresh that and we bring that back into our total, which is really what we need to be looking at, I want to give everyone an answer and be like, this is the best stock to take right now. Here's all the rankings. See, T-Mobile is going to have moved. Its ABS rank is going to have changed. It's probably still going to be near the top, but it's not going to be on top because they're more expensive now. Yeah, exactly. They're down here now. See, they became more expensive at 525, and so their ranking changes. Even though it's still a good value, they're still on this list in like 21st place. They're not number one anymore. Now the number one is not number one anymore because I haven't updated this price either. So you can see there's a lot of updating that needs to happen. And I'm gonna kind of take a step back and think about, who do I want to follow every day and how do we follow them and how do we update this when we care? Well, this is what I came up with. I came up with the process about, like, basically, in order to update this for like right now, this is what you do. You go to raw import, you go here, you go to the stock screener, which this is probably not going to open up and be recorded, but it opened up the stock screener NASDAQ website. You just download the CSV that's sitting right there. It says download CSV, and you get what I'm about to paste in here, which you also can't see, but I'll have it open in a second. You get this list of, all the companies and all the 7,000 something, and it goes right here in the raw import. And now you're going to get like a 10-minute, 5 or 10 minute delayed price, but it's still going to be a half hour newer than what you're looking at right here. So for example, 72% of things were increasing before. Let's see what it is now. Now it's even more. I mean, the market has shown even more positive sentiment in the last half hour in aggregate. More money has come into the market, most likely, because this number changed as well, right? Now, Collier's market cap is not right. Something's wrong here. Collier's Group is not $4 billion. Something is wrong there. So there may be some errors, but the rest of these look right. It says Collier's International. So yeah, some number is wrong here. So that is not the headed market cap. But like, you can then sort this list by everything. Now here's what the other thing that happens though. Stay with me. The options thing is going to change now. So MongoDB may or may not be the biggest gainer by today's boom number of the day. We're going to find out. We're going to refresh, and the answer is they still are. They actually increased. Apparently they went up even more. So this list here is the list you want to start looking at companies and then checking their options prices and then determining if you want to buy them right now. Okay, that's the question. Well, first of all, something like Lululemon moving $4,100 in option value. It costs $3,000 for their options. I don't know what's behind this, but the algorithm doesn't really recommend it because this is an ABS rating over here. So this is also available for us to look at right here. And this is important because what you want this number to be low, right? You want the options to be cheap. You want the boom movement number to be high or very, very negative. You want it to be extreme, meaning they're going way up or way down. So you want the bar to be way to the right or way to the left. You want this number to be low, which is what percentage of the company's value the company has to move over the option period for you to make money. Like Caterpillar's is much lower than MongoDB and Lululemon, right? So that's saying that Caterpillar essentially here is probably one of the better deals on here. The ABS ratings, the lowest of these 5, right? It moved $953 in intrinsic option value, only cost $842. They're $218 a share. Like this is not a bad deal right now. And that's where, so I would be like, all right, well, let's go look up Caterpillar and make sure their options are still costing that. It might even be cheaper because Caterpillar is one that's kind of, I mean, they're on the radar as a big company, but they're not on the radar as being like a huge option seller, but we're going to see what their spreads are. And we're going to answer this question. So I'm looking them up. They've gone up even more. I might end up buying Caterpillar today. It's probably going to happen. Because and I also want to look at the downside too, to explain to you how to read this. But this is serious work. You can't just automatically do this. Like there's actual work to be done here. And it involves querying the current prices and making sure you're getting a good deal. So for example, Caterpillar is now all the way up at 220 is the new strike price for them. It's 325 to 345. Stop it. 345 and then 278 to 290. So these are very good, pretty tight spread numbers. Spread range is good at 5%. So now we're going to go back and refresh and we're going to see where they are on this list. They actually moved up to number 2, meaning this got cheaper. This is apparently an X. I'm actually going to buy it right now. I'm going to see if I can get these prices. Now, I should take a second and pick a price instead of just taking the market price, but I'm okay with doing this, and I'll explain why. This is so high up on the list and such a reasonable price for a $200 a share company that this is like this. These are all great numbers. Look at the ABS ranking just dropped to 5.7. I'm buying it at the market rate of $220 a share strike price right now. Actually, I'm just buying market Caterpillar 220 call June 9th. Just place the order, and then I got to do the put as well. Option chain Caterpillar June 9th 220 put market rate. So I'm getting a bad deal because I'm buying them at the market rate, but I do not care because I think that so I bought one for 360 and the other for 281. I got the call for $360. I got the put for 281. So that is $641 or something I just paid. So as you can see, I paid a little more than I should have. Should have paid only $620, and I paid $643 after fees. Right. So I spent $24 more than I should have, but I don't care. I think they're going to move more than $6.50 before next Friday, based on this, based on all this information. So that is the full cycle process about how you analyze this in real time and make a decision about who to buy, because you have to get their new price as well. So is there anything else on the upside that we want to buy today? This is all looking too expensive for me right now. Snowflake, I've seen a couple times on here. So there's something clearly to watch about them. As noticing they moved 1,200 in option value and they only cost 1,100. I'm tempted to go get a new price on them, but I'm going to leave it alone for now. But that's something to watch. So I have seen them on here multiple times. Anybody else on the upside? Doesn't look like anyone surpassed their standard deviation, meaning they got over 100% of where they needed to get today. But let's look at the downside, people. Let's go to the bottom. So I already made almost 3-to-1 on my money today on T-Mobile after owning it for one day. Congrats. High five yourself, because that was something the algorithm's been picking. What about this other stuff? What is this guide wire? Well, they're only $74 a share, so that's not helpful. The ABS rating's terrible. The spread range is bad. Everything's bad about this. They just happen to be moving, but who knows? Anything else? So nothing else moved more than it needed to the downside because it's more of an up day. Notice Roblox shows on up here again, but they're only moving $1. They're also really low share price. So there's actually Marvel is down, huh? Okay. They were up a lot yesterday. Semiconductors continue to go back and forth. I did lose money on Taiwan Semiconductor. I lost a lot of money. I lost 260 out of my 500 almost. That was a big loser. But I did make more than that on Marvel and on AMD. Speaking of AMD, how's AMD doing? Micro devices, advanced micro devices. They are at 118 now. Interesting. So they saw a high this week, I believe around 128, right? 127. So now they're moving down. Just want to look at their chart for a second. Just go on to answer that. AMD has been just absolutely fantastic. Over the last 5 days, yeah, they were up at almost 130 coming into Tuesday. But then they went straight down. So they varied all week. Yeah, between the high 120s to now 118, 119. I mean, think about that great range of like a $9 or $10 range almost. And you can see that's why their options got priced expensively. You can see they don't have a good rating anymore because apparently these are $888. But are they $888? We're going to go back and we're going to look at their new price. And this one's important because the price is going to go down as the company stops moving like crazy or slows in its crazy move. So it's between 340 and 350 and 250. That's, boy, the spreads are so tight. So tight. So at 118, it's 340 and 350 and 245 and 246. I mean, look at how tight these spreads are. And let's see what that does to its number. It puts them at now only $593 for the week. And it gives them, they got to move 5%. And the boom number is not awful at 14.9, or sorry, the ABS ranking, meaning this is still now reasonable buy. It's getting more expensive because it was $800 a couple days ago. Now it's $600. Are they going to move $6 a share? They're the company that says yes. They've been the best one over the last 3 weeks. So it's important to kind of wait it out until the boom number and the ABS number gets better by the price of the option falling. So do I buy an AMD right now? I think the answer is yes, because this has just gotten reasonable again. You weren't supposed to buy it at 880. So maybe you can time watch them for the day and try to time it right where you buy one when they're going in one direction and you hope it flips back to the other direction so you can get the other strike price cheaper, the call or the put cheaper, the paired option. That's a way to handle this. And I might watch that the rest of the day because they're just a great mover. And there's no reason that they should stop moving because they've got this weird conglomeration of, I think Microsoft is trying to make them compete with NVIDIA. Because Microsoft doesn't like paying NVIDIA's prices and is worried NVIDIA's stuff is needed and above it in class. So they're trying to make their own, right? And I think that's essentially, I don't know if Microsoft is taking other gambles on other chip developers, but I know that the AMD one is where they got the infusion of cash already. And so that makes sense that either they're going to perform or they're not going to perform, but Microsoft's going to try to make them perform, right? So that puts their market cap at, that's why they're so volatile, because they've got such a weird potential future, as you saw what happened with NVIDIA, if you watched any of NVIDIA's stuff. I still can't spell NVIDIA right. Is it N-I-V-I? No, I just NV. Jensen Wang, Wang, I think Jensen Wang. He's Wang. I got to get he's American, but Korean, I think. He's freaking awesome. Genius, dude. Genius guy. Yeah, they're hanging out at $396 a share. maintaining their 100 share increase from last week. Like they're just like too solid, right? They went down, they go right back up like $20 yesterday. Yeah, like this is the future with robotics and stuff, and what they're doing is pioneering. So let me back up. For those still listening. Basically, I think I'm going to buy an AMD. I'm going to watch that and do that today. And I'm just combing through this list daily to see which names are popping up, have reasonable share prices, and have good ratios. I want to look at the ratio for a second. This is the other thing I want to start sorting by, which is the cost price ratio. When this number is really low, that's great. That means the price of the option you're paying is very low comparatively to the price of the company. Like that's what this formula is related to, is its current price. So you always want really big share price companies because they can move a lot because they have a high share price, right? Well, this number, is helping to show what you're paying for. It says McDonald's has a great ratio, but is McDonald's a good buy? And the answer is no, for the most part, because they just don't move enough, even at the share price. And so they don't get a good ABS ranking today because they'll have these days where they just move a few cents and there's just not a lot of action. The spread range on their options is also not perfect, or it wasn't previously. I'll go get a new number on this because these are actually going to be less today, but whatever. What about Pepsi? Pepsi gets a much better rating, and I bought Pepsi yesterday because Pepsi apparently moves more on a daily basis. Here they are once again moving over $1 just without a problem. And the spread range is pretty good, and they just move around. It's tough to lose money on them because these options are pretty cheap for a $180 a share company to be only $350. It means they only got to move $3.53 in either direction, and you have to make money if you want to sell one of your options. That's what that means. $3.53 away from the strike price. That's all they have to move. And there they are getting like almost halfway there on a normal random Friday. So Walmart's also a pretty good deal, but notice their share price is not that much. So the point is, I wanted to sort by this cost ratio because it helps us find things when they also have good ABS rankings, like this one, like Coca-Cola, but they're also a low share price. So you want high share prices and low boom numbers. There's a lot to look at here to really find the best one. That's why I'm still having difficulty giving you just one sort. It's supposed to be ABS ranking, but our ABS ranking is skewing itself to lower share price companies. And I don't want it to gloss over the higher share price companies and the higher cost options, because those are still profitable and sometimes can be much more nominally profitable because of the way that they move. And so I want to kind of adjust the ABS ranking formula to reflect that more. And I don't know how to do it yet, other than to start sorting by things like this as well, and really glancing at stuff. Like what else? Like, for example, here's another thing we can sort by: spread range. Things that have the best spread range. That means these are traded very, very frequently. That the spread range number between the bid and the ask is so tight that there's always a market for your option, and you have a down to the dollar almost declaration of what you can sell it for, and it'll probably go when you sell it at that limit amount. Things are pretty interesting like that. And so these are companies that are highly traded right now. And you can see AMD is freaking on there. It's another reason it's a good deal. Cost options is not 887. Sorry, we need to refresh this. Sorry. Bring this in here. Now let's refresh this by spread range. Now they're number one because I just updated them. Yeah, this needs to be bought by me today. $600 is actually reasonable with them. Like, are they going to go to 112 or 124? Probably. Probably by next week. You got 5 days for next week? Sure. Yeah, that's probably going to happen. It'd be weird if they didn't. They're a higher price stock than Taiwan Semiconductor, which didn't do it for us this week. But AMD is just gets volatile. It just gets traded more. This Zscaler company keeps showing up on here. They keep moving. I want to look them up as well. I made money on them. I did them once weeks ago, and they keep showing up. Well, I've gone too long, guys. I could do this forever. point is there's a lot that goes into picking the stocks. However, many of them are winners when we start sorting by these rankings. And so, I mean, it's just crazy. Like I bought a Caterpillar today. That showed up because it's just a reasonably priced thing, at a high share price. And so I'm kind of migrating to talking about those ones a little bit more than the super low share price ones that just can't move as much. So you're gonna hear me start doing a cutoff of about $100 a share, and then the only companies that we keep under $100 a share on here are going to be abnormal movers, ones like Roblox and just weird stuff that just has a tendency to move more. That's the only reason I would keep something that's lower than $100 on here, because a lot of this stuff it just can't move all that much. Like how much can Citigroup move? Like $1? Like it just needs to be gone from here. And I don't want to be partial because I lost money on them this week, but this is just like, it's a $45. Like how much could they possibly go down? $45. Well, that Caterpillar can go down $45 in a day with some ridiculous news. So that's actually possible. That's why like this ratio of this being 3 times, 4 times expensive, it doesn't make sense. Like you can make way more than this on a company that's $218 a share. You can't really do it here. So I just feel us migrating up away from this. And it doesn't necessarily ensure you a less risk all that much, because stuff can still hang around your strike price and not move on a company that's low like this. So I am going to migrate away from recommending these lower share price companies, even though many of them have worked out, like Verizon somehow today, like Pfizer, it's a low one that kept working out. Walgreens Boots Alliance finally moved again today and became profitable. Like WBA, like those things have worked, but I don't know. I need a little. I don't want to say buy tons of them, buy multiples of those and then try to trade them that way. I don't really want to do it that way because it just becomes a lot to track, and I just don't think it's necessarily worth it. I see big gains from big movers nominally, and that kind of makes sense. It's less to pay attention to. So we'll migrate more toward that in the future, and I'll be talking about things like Caterpillar and Home Depot more than I'm talking about Citigroup and Verizon. All right. So Starbucks, by the way, I did make profit yesterday. Today they're up, and I sold their call for like $6 because whatever. So I made a very small profit on Starbucks here. Once again, less than $100 a share now. Made a little bit of money, but how much can they really move? They could have moved more than this, but you'll see that it's better to go with higher share price companies. All righty. That's the update. It's been a good day. I'm looking at my account balance. It says I'm up almost $1,200 today. It's saying that now I'm up $1,230 since I refreshed. It says I'm up 30% on my portfolio as a whole today. So on today is a day that I really needed something, I needed this to basically, I got to go because I got calls, but I needed it to do something like this today, and it finally did something like that. And it's clearly working as this test is working out. All right, good luck, everyone. May all your trades be winning and be fine.